What is up, ladies and gentlemen? Camilo here from Trending Waves, bringing you to our end of the market update for this Thursday, June the 10th of 2021. I hope you guys had a fantastic trading session. And if you remember yesterday's video, we were discussing how today we anticipated the CPI number, or the Consumer Price Index, to come above consensus. Consensus came in at 4.7, and the actual number was 5%. So the previous month was 4.2. So what does this mean? What's going on, guys? Right? That's what your question is, and that's okay. That's my question as well. And what I'm thinking here is that inflation, markets took it off this morning as inflation was heating up, and that meant that if that's the case, if you remember from the previous Fed meeting, they're saying that this whole inflation is transitory, that this whole inflation is not going to go for long, and it may be true, and it is true actually, because after today's price index, consumer price index came in, there were other data that came out, and is pointing towards a transitory situation, because a lot of the increase in demand, increase in prices are within the sectors that were affected the most during the pandemic. Okay, and so because the economy is reopening, then that only means that obviously by nature there's a lot of more demand for these type of things with less supplies. For instance, just give you a quick example, the automobile industry, obviously Hertz and other rental companies, they slowed down production, they slowed down demand, and some of them even went bankrupt during the pandemic crisis. Okay, because obviously not everybody was driving. But now that everybody's out there, now everything's reopening, there were no cars anymore. There were less supply. Now there's more demand, so prices increase. With the same thing with the chip makers, right? And there's low supply for chips for cars. So that's just an example I'm giving you, so you could get an idea of what this whole thing is going to be. So it's just mainly focused on the areas that were affected. So as soon as things balance out, then things can get back, and as they said, it was transitory. Okay, it doesn't look like anything in the 70s where inflation ran higher than expected, and so that's a history lesson on its own. But you get the idea. So I mean, early in the morning there was those fears because the 5% was pretty bad. Okay, it was horrible. I mean, from the article here, it was, let's take a look real quick. Okay, so I'm just gonna put it up here. This is the article from CNBC. There's this excerpt here from this paragraph. It says, so the consumer price index rose by 5% in May on a year-over-year basis, the highest since the summer of 2008, when oil prices were skyrocketing, and hence you saw today oil also was oil up today? I think it was. I'll check that chart later, but anyway. So excluding food and energy, core CPI rose 3.8 year over year, the highest pace since 1992. A third of the increase was attributed to the sharp 7.3 increase in used car and truck prices, as I mentioned just now. So all of this here, guys, is more in line with what the Fed is saying. And so how are the markets taking this? How are the markets digesting this whole information? And it's sort of in line with our wave count. And I am a little bit more leaning towards this interpretation where we see our next degree up, which is the primary degree, wave 1. And our price targets has always remained at 454 or 444 within this fifth cluster. Obviously, as I've been mentioning, this wave structure remains true as long as we remain north of 398. So taking it down to let's just go to the 1 hour time frame and review. Normally after core CPI comes out, or CPI data comes out, there's always the digestion. There's always the markets need to digest this, need to take a look, need to whatever they do. And what's going to end up happening is that if this is in line with the wave count, then I do anticipate a brief pullback into the wave 2, as I've been outlining here. Okay. If you remember yesterday, we were calling out the 1272 external retracement fib level. The 1272.2 comes in at 424.48. It was a 424.50, the high of the day today, our intraday high, which is all-time high, to be honest with you. And so that gives me if we held that level and we sold off heavily, because we did, I mean, even in the 5-minute time frame, look, okay. So as soon as that touched, let me zoom in. So we were having a hard time breaking above it, and we immediately sold off. Okay, 1, 2. So it looks like 3 waves here, 1, 2, and 3. So what does this mean for me? What does this mean for our positions? What does this mean for coming into the next few weeks? And just tell us, Camilo. All right, so I am. What I think is that we will see a short-term pullback into the wave 2. Okay, so reviewing this wave count quickly, from these May highs, we go down in A, up in B, down in C to complete the wave 4. I do now believe the wave 4 is complete. So up in 1, down in 2, 3, 4 to the wave 5 to complete wave 1. Okay, we did not break above all-time highs. We found resistance. We sold off in 3 waves. We then gapped higher into the wave B. Now this is where it's throwing me off just a tad bit, guys. So as always, Elliott wave technicians have to have several wave counts in back of the pocket in order to move and navigate the markets. We cannot always just rely on one wave count. I strongly suggest you guys who are learning Elliott wave to try understand that concept. Always have 1 or 2 alternates to your preferred interpretation, just in case things don't go according to plan, because obviously the markets will do, the markets will want to do, and what we can do as traders, investors, is just play the part. Okay, but obviously we have the edge of understanding the wave pattern, the wave interpretation, or the wave principle. So my preferred interpretation is this one, okay, that we hit the wave B because we found resistance at the 1272, which is the retracement of wave A. Okay, this wave here, let me just highlight this for you guys. This wave here, and then you get this retracement. So the 1272 came in at 424.48, just plus or minus, because obviously TradingView doesn't give you anchor points, but the high of the day was 424.50, so spot on. Okay, so that kind of gave me a bit of a confidence that that was the wave B. Now our next level, okay, if we keep on going lower because of digestion, investors need to take more, read more into the reports and whatever, and the markets are just a little spooked, we will see a brief pullback into the 38 or the 50%, which is a retracement of this level from the wave. Actually, where is this level coming from? Yeah, there we go. So obviously, if this is, yeah, it'll be here. Actually, let me bring this down. There you go. It'll be the wave 1. So wave 2, as I've been mentioning before, wave 2, this is the retracement. You take the tool, you take the measurement from this point to the high of wave 1, and you get a retracement level to measure where wave 2 could potentially be anchored. And a 38 or the 50% are common levels for a wave 2 pullback. So we will need to see a 3-wave decline in order to understand where this could come in. Now another level that we'll be looking at is, since we found the top here, we're going to shift this up just ever so slightly into the 1272, and we're going to see that perhaps this is an expanded flat, or right, so it'll go like this. So these are, I've been saying this before, these are designed to trap the bulls, okay, in that we break above the all-time highs, but we reject the 1272 and we break lower. And this point here, the low wave A, is designed to trap the bears, because we are breaking the previous low, and they're going to assume that we're going to crash, and so they'll start taking short positions to then realize that we found support and we're going to end up going higher. So this wave pattern is always designed for that. Always remember that, guys. Always remember that. So that always occurs in corrections. Please excuse me. So moving on, if that's the case, then yeah, we will anticipate, we will be patient to let these levels unfold before we take a trade. We've been building up positions in the Discord group with our members, anticipating that we will go on higher. So it appears that excuse the background noise there. So it appears that that could be the case. Now the alternate account is suggesting that because this is throwing me off just a little bit, this gap here. Okay, gaps don't normally occur within a corrective wave B. And so what I'm looking at here is that potentially this could be wave 2 had already finished, okay, which is still very much so within Actually, this will be the 26, right? The 23.6 retracement, or between the 23 and, okay, so that's pretty much valid also. So if the wave 2, because you still see 3-wave pullback here, right, for A, B, and C, so this could be the resumption. All right, we could start seeing an impulsive structure here. Now we will find out relatively soon if that's the case. So if that wave count is actually what it is, okay, let's just move that here. Actually, A, B, and then C. Okay, if that's to be the case, then we will need to see this level break either tomorrow or Monday. Okay, this level will need to break the 424 spot 48 or 424 spot 50, which is the high of today. We will need to see that level break in order for this to be considered, at which point we will know that we are within the wave 3, and it's off to the races, guys, and we're gonna have to start looking for positions to take advantage for the last wave in the primary degree. But don't think that's the case, and so we're just gonna wait. Okay, so I hope that was a bit of clarity for you guys. Okay, and if you have any questions, just shoot me a comment down below. As always, I do appreciate everybody that watches my videos. Hit the thumbs up, subscribe to the channel. If you like my content, just do that, because it does motivate me to put out more videos. But all right, so going on to the Qs. What the heck is going on in the Qs? So as I mentioned to you yesterday, while the SPY is making its wave pullback into the wave 2, the Qs will be making its 3-wave pullback into the wave E. So that's how those two are going to pair up together. Okay, because right now one is making a triangle, the other one is forming its next impulsive structure. Okay, so sometimes, you know, those things they diverge, but hey, they should always come back together. And this is the way I see it. So because CPI and a lot of investors or economists, right, said that there are signs that prices are rising, but it could be temporary since they are centered around the areas that were affected by the pandemic, as mentioned earlier in the video. So I do believe that we are going to see new highs. So wave 3 waves down into the pullback into wave E should find the support at the trend line here that I have. What was I gonna say? Okay, so let me review quickly the daily time frame so we understand further what we're looking at, just like in the SPY. Okay, so we're still looking for primary degree wave 1 at 379 or 334, taking down to the 1 hour time frame. Our wave structure is still within a triangle as mentioned. So down in A, up in B, 3-wave pullback in C, 3-wave pullback up into the wave D, now 3-wave down. So the way I believe that, looking at our traditional indicator, here the indicators, right? So if we look at the 1 hour time frame, for instance, let me zoom in here. So we see some divergence, and divergence normally occur within the last wave. Actually, the 30-minute time frame is a bit more clear. Okay, so if the wave D can be anchored here, you'll notice that we have on the RSI, the 30-minute RSI, we have a divergence. Okay, we're losing momentum while we are making highs. Okay, so this high here on this candle, where we have a high in the RSI reading, was at 340 spot 44, but we did not make a high today at which this candle's high here is 340 spot 45. So it was higher. It was a new all-time high, actually. No new all-time high. The Qs have not made, but intraday high rather. Okay, so we see divergence in the 30-minute time frame. So that's what I'm saying. So, and even on the MACD, we're seeing the averages curling over and with the histogram losing momentum. That's indicative of a final wave or a final wave structure that we can start expecting a 3-wave pullback here. The levels to watch on this decline, because wave E could, end anywhere here, just as long as we remain north of the wave C at 316 spot 01. We will take a fib extension, or fib retracement rather, and we go to the highs. So a theoretical 3-wave pullback can take us down to the 38 to the 50 at 330 spot 92 or 328 spot 26. Okay, guys, so I think that covers the covers up pretty much everything that I wanted to talk to you guys about from yesterday. The individual names that we reviewed, like Amazon, Apple, Amazon's breaking out. To be honest, we looked at the chart yesterday. Workhorse is ever so slightly consolidating, like we were expecting as well. So those names are still very much so active and valid, and we are still keeping them on watch for potential trade opportunities. But until we see a break above the 1272 or 3-wave pullback here to complete the overall wave 2 decline, then we can with confidence say, okay, then perhaps it's time to get on board for a long position. All right, guys. So I do appreciate your time. I appreciate again your patience here. Subscribe to the channel. Hit the thumbs up. Hit the bell notification so you'll be notified when I upload these videos. If you want to join our Discord group where we share and update our members with Elliott wave counts every day for individual names, Apple, Amazon, whatever you want, and the Qs and the SPY, the link is down in the description. Join for a 3-day or a week free trial. Let me know what you think. And as always, I thank you, and I shall see you guys tomorrow. Bye-bye.